I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from the week in tech. Coming up, President Trump's advisory councils have disbanded after several CEO exits. We explore the business world's relationship going forward with the first CEO president. Plus, after the events in Charlottesville, the tech industry is being tested over hate speech and hate groups online. And Alibaba delivers blowout numbers. Sales jump more than 50% thanks to its robust e-commerce business. First to our lead. President Trump says he's ending 2 advisory groups of American business leaders. This after multiple CEOs stepped down from the boards as Trump faced blowback for failing to sufficiently condemn white supremacists. And a Bloomberg report that the remaining members of the council had decided to disband. The president made the announcement on Twitter saying, quote, rather than putting pressure on the business people of the Manufacturing Council and Strategy and Policy Forum, I'm ending both. It's a serious turnaround from the tweet Trump posted Tuesday, which read, quote, for every CEO that drops out of the Manufacturing Council, I have many to take their place. Grandstanders should not have gone on. Several CEOs also left the councils earlier this year following disagreements over the president's approach to immigration and climate change. Keith Raboy, partner at Khosla Ventures, joined us to weigh tech's relationship with the White House.
Well, I think the president is clearly struggling with lots of issues. So first of all, is I mentioned on your show 2 years ago, I think the president's sort of a sociopath. So I think he's revealing under pressure more of his characteristics. Like under pressure, stress, people tend to reveal their natural characteristics. And at the end of the day, when he gets attacked, he's going to punch back. You saw this in the debate stage, but none of his opponents were willing to punch back with him and really put him in his place, where there were a few opportunities if you watch the videos. Right now, this is playing out on a national and international stage, and it's really not helping him.
Where do you draw a line when it comes to free speech? Is it white supremacy? Is it racism? I mean, what counts as crossing that line? Well,
I think people have a right to file for a permit and protest for any view in the United States. What they don't have a right to do is to actually be violent, to instigate violence directly, and they certainly don't have the right to have the President of the United States defend them. In 1977, when I was growing up in the 70s, this Nazi Party of the United States marched in Skokie, Illinois, which is where a lot of survivors of the Holocaust actually resided, and they intentionally chose that destination, and the courts protected their right to march there. But the President of the United States denounced them, and it was a one-day story. Right now, the president is basically not willing to take sides. Free speech doesn't give you the right and doesn't protect you from people having an opinion on one side or the other, and he should clearly be on the side of freedom and liberty.
What do you make of the calculation that these CEOs are making when they say, all right, I'm out, no more business counsel for me?
Well, I think, as we've talked about previously on your show, I think there's a difference between partisan and policy behavior. I don't think CEOs can engage in partisan behavior, but over the weekend, this wasn't a partisan issue. If you look at any prominent Republican, including most of the more conservative members of the Republican Party, were very explicit in denouncing the protests in Charlottesville. So this is not a partisan debate. It's basically President Trump and a very small sliver of his party versus most mainstream Republicans and conservatives.
What's your take on how tech companies should handle speech like this, like the Twitter @YesYou'reRacist account, Google, shutting down that YouTube channel, Facebook deleting blog posts related to this topic?
I think most of the content companies, Facebook and YouTube, have to be very careful. As they start deleting specific viewpoints, they run the risk of liability under the DCMA. So once you start pulling down certain pieces of content, you're technically liable for all of the content on your site.
What if it's Nazi content?
Well, I think there's some constraints about the content, particularly inciting violence. But absent that, I think it's a very difficult place to be. I don't think most technology companies can really censor content, both legally or prudently.
So you don't think they should? You don't think they should, even if it's Nazi content?
I don't think content should be censored.
Okay. What's your take on James Damore, this Google engineer who was fired after he sent a memo that was circulated widely within the company suggesting that there are biological reasons for the underrepresentation of women in tech and women in leadership?
I think he made several points. One I agree with, and one I know I'm not an expert in. I definitely agree that Google is an intellectual monoculture. Like if you surveyed Google and said what fraction of Google employees voted for Trump, what fraction of Silicon Valley Google employees voted for Trump, it'd probably be 2 or 3%. So it's clearly not representative of the American people, and that's a different point than what are the roots of the sort of employee base and engineering base differences at Google. I am not an expert on what causes that. I'm not an expert on Google. I'm not an expert in biology. I do think that Google is taking some risk in being very draconian about some views. I think personally, if I was running the company, I think it's ridiculous that anybody spends 10,000 words and distracts an entire company. But Google has a culture where there's been these mailing lists with off-topic topics for a very long period of time. But I think there's a general rule that people should not be able to take business time and distract 70,000 employees, regardless of their views.
I did speak to James Damore the day after he got fired. Take a listen to what he had to say.
It's hard to regret it just because I do believe that I'm trying to make Google and the world in general a better place by not confining us to our ideological echo chambers where only one side of the story can be heard.
So ideological echo chamber, political views are one thing. What if those political views exclude half the population?
Well, I think that a company has the right to say you can't express any range of views on particular topics. So, for example, it'd be totally inappropriate to write a religious crusade document on any side, Judaism, Christianity, Muslimism, and publish it to a company. But I think the company, once they allow people to have a format in a mailing list that's open-ended, I think they're playing with fire, selecting some views that are acceptable and not. I think it'd be much better to say religion, politics, and topics like that don't belong in the company. So, for example, imagine a mailing list where people are debating abortion. That would absolutely offend both sides completely legitimately right away and would distract everybody from their work. It'd be perfectly acceptable for a CEO to say, we're not having emails about abortion in our company. That's not the reason for our existence.
So, final thought, should he have been fired? Yes or no? 30 seconds.
No.
Why not?
Because I think Google's culture, if you looked at the historical topics that have been covered on the miscellaneous mailing lists at Google, are very wide-ranging. And I think without changing that policy, at least based upon things that have been communicated to me, I only worked at Google for 2 weeks. But fundamentally, I believe from what I've read that those mailing lists are pretty wide-ranging and wild. Insofar as that happened at a different company that had less of that precedent, then absolutely, I think it's perfectly fine to fire someone for distracting people.
That was Keith Raboy of Khosla Ventures. Well, Cisco narrowly beat analyst estimates for earnings and revenue in its latest results. Meantime, the company is touting a major turnaround in the networking business, moving from hardware to software. Cisco's machines form the backbone of the internet. This quarter, the company predicted revenue in the current quarter may fall as much as 3%. The Bloomberg Daybreak Americas team spoke to Cisco CEO Chuck Robbins about the turnaround efforts and the current political climate.
We said that we were going to begin to shift more of our business to a software and subscription model, and we have made unbelievable progress. Just this past quarter, 31% of our revenues were from recurring, which is up 4 points from the prior year. We have actually our software deferred revenue grew 50%. And actually eclipsed $5 billion for the first time. And 2 quarters ago, I said it eclipsed $4 billion for the first time. So that's moving rapidly. Of our software business, 51% of our software business now is actually from subscriptions. So we have made a great deal of progress. I think the strategy we laid out is actually working, and I'm very comfortable with where we are, and I'm really pleased with what our teams have accomplished.
So Chuck, if I'm a long-term investor in Cisco, I hold your stock, I believe in you, I want you to succeed. What are you telling me to look at to know when I'm certain it's going to turn around? What's on the dashboard there that says, okay, now I see it's working, or for that matter, maybe it's not working?
Well, I think that, first of all, we provided at our financial analyst conference some new metrics that actually indicate that this transition is working. Metrics like this recurring revenue percentage of our software business coming from subscriptions, the size of our software business. And if you look at our actual software business and you stack ranked us against traditional software companies, you might be surprised at how big it is. But looking at the growth of that deferred software balance and looking at the percentage of our software coming from SaaS offers, we provided a lot of metrics that we're reporting now on a quarterly basis to help you feel better about it. But at the same time, we're executing on our financial model. So last fiscal year, David, in the midst of this transition, we had record cash flows, record earnings per share. So we're actually executing on the financial side of it for our shareholders at the same time that we're going through this transition.
Chuck, over the last couple of days, many American CEOs of some of the biggest companies in this country have distanced themselves from the President of the United States after comments that he made following some ugly rallies over the weekend. As you see it, as the CEO of Cisco, is this an administration that you can still work with?
Well, first of all, hello, Jonathan. You know, the events of this past weekend, first and foremost, it's frankly incomprehensible that we're in 2017 and we're having these discussions. And I think that most of America and Cisco absolutely abhors racism, doesn't stand for it, doesn't stand for neo-Nazism, white supremacy, discrimination in any kind, way, shape, or form. And that is true of Cisco as well. And we've communicated that very clearly with our employees this week as we've gone through this. The second thing is that we still have a lot to do in this country. And we still need to drive GDP growth. If you look at where the country is relative to some of the latest numbers, we have other regions of the world now that are actually beginning to grow faster than we are here, which is great that they're growing, but we should be growing faster in the United States. We need job creation, we need tax reform, and so regardless of what's going on, we can't abdicate the need to get those things done. And then finally, I think from a country perspective, we have to find a way, and our leaders have to find a way, to focus more on the things that actually unite this country, the things that have made us great, and not focus every day on our differences of opinion and the things that divide us. And I think that's what's most important. But I think it's incumbent upon the business leaders here to continue to work on making sure that the things that this country needs to be successful over the next few years, that we're still making sure that we're playing a role in making that happen.
That was Cisco CEO Chuck Robbins. Coming up, Bitcoin continues to surge, this time past $4,000. What is driving the demand? We will discuss. Plus, tech firms are stepping up the policing of hate speech online. We'll hear from the CEO of Cloudflare on the process of reviewing these policies. This is Bloomberg. It is another successful rocket landing for SpaceX, the 14th to be exact, and the 6th time the reusable portion of the Falcon 9 returned to Earth successfully post-launch. Monday's rocket carried a Dragon capsule loaded with over 6,400 pounds of cargo destined for the International Space Station. The Dragon will spend the next couple of days in orbit before meeting up with the station on Wednesday. Bitcoin continues to show no signs of slowing down. The cryptocurrency soared past $4,000 for the first time ever this week, capping off massive gains this year. The rally comes after a split last week that threatened to jeopardize its growing mainstream interest. Bloomberg's Caroline Hyde caught up with Adam White, Vice President of Coinbase, an online platform that allows users to buy or sell Bitcoins by connecting with their bank accounts. That's going all in on demand for the digital currency.
What we're seeing is the market respond to a real improvement, a real leap forward in the technology that stands behind Bitcoin. So something called segregated witness locked in over the last few days. And segregated witness is effectively an improvement to the core protocol that could have Bitcoin processing the same number of daily transactions as we see from the likes of Visa and MasterCard.
What about geopolitics? Because there was talk, of course, a lot of deals being done in terms of Bitcoin versus the South Korean won, Ethereum and the South Korean won as well. Is there geopolitics at stake here driving it higher?
I do think Bitcoin and other digital currencies like Ether and Litecoin, for example, all are influenced by kind of the macroeconomic factors at work. So a good example is what we saw just last week is that Fidelity, one of the world's largest brokerages here into the U.S., is actually doing an integration so that all Coinbase customers can attach their accounts to Fidelity and see their digital currency holdings right in line with their traditional financial assets. It's those types of partnerships. It's international exchanges like what's going on in Korea, Japan, parts of Europe. These are all factors that influence traders and the corresponding price of Bitcoin.
Of course, you're general manager also of GDAX. This is particularly aimed at institutional investors, at the professional investors for Coinbase. And Fidelity is really one of the institutional investors that is ahead of the game when it comes to digital currencies. I mean, they're mining their own Bitcoin, let alone integrating it into some of their own users being able to access their Coinbase accounts. Why are some other institutional players reticent to get in? Why do they perhaps need more trust to build within exchanges such as yourselves?
Yeah, I do think Abby Johnson, the CEO of Fidelity, is going to be looked back at as kind of a visionary. She sees something in where this industry is headed that's very exciting. Now, I think others, while they may not be as quickly moving in the space, are absolutely investigating it. Helping run GDAX, which is our institutional grade exchange, I'm on the front lines of speaking with these hedge funds, family offices, proprietary trading firms, and they're all starting to say, look, help us understand what digital assets like Bitcoin and Ethereum can become. Help us understand the market. If I had to pick one thing that I think is going to be a watershed moment, it's when we start seeing kind of more clear and consistent regulation, not just in the US, but abroad. That really helps give the confidence to institutions to begin trading this digital asset. And that's at the forefront of every decision we make here at Coinbase and GDAX, is how do we become the most compliant institutional customer provider here in the space.
Of course, you deem yourself the most trusted digital asset exchange. There have been worries about a hack that occurred back in May, for example. It was but a small one, I understand, and also you've been gaining so many users, but there's also issues about liquidity. I mean, how do you settle these sorts of concerns to ensure that it can keep growing and taking on the institutional demand as and when it grows?
Yeah, just to be clear, it wasn't a hack, and what we saw was a byproduct of still a relatively thinly traded, some might say still illiquid asset that Bitcoin and digital currencies are. So we can see movements very quickly in the marketplace when customers place large buy or sell orders, and that's effectively what happened in May and June. What we've really done is kind of recommitted to providing the stability, the transparency, the market integrity that institutional traders require. And we do that partly through this new fundraising round, right? Having raised $100 million, we're now able to continue to reinvest into the team and the customer support operations to provide world-class service to our customers and what they expect.
Sorry, so the individual who lost some $8,000 via his Coinbase because of his Verizon phone as well, that wasn't a hack?
I see. Okay. Yeah, I think, yes, what we saw, we call that an account takeover. And that's where when individuals have methods by which they'll be targeted for either having their phone ported or their password compromised because they didn't choose a very strong password. At Coinbase, we have a significant team that's there just to provide kind of fraud prevention, we call it. And we help kind of proactively notify customers when we see signs of things happening. And we have a number of kind of proprietary steps internally that we do that whenever we look at something suspicious, we take the effect to lock down their account. And many times we'll help write the customer as well.
Interesting. And of course, you've got this $100 million. You've got plenty of priorities there. New York office for GDAX. You've got a customer support engineering, as you mentioned. What about expansion of the cryptocurrency base that you currently do accept? Because you've got Bitcoin, you've got Ether, you've got Litecoin as well. You're looking into Bitcoin Cash. Any more to be added to the portfolio?
Yeah, this is something that we get asked a lot about, and we've spent considerable time we want to be thoughtful and ultimately provide a curated selection of digital assets that our customers can trade. On GDAX, which is our institutional platform, there's probably going to be more than what we'll see go onto Coinbase, which is more of a retail brokerage. But before we add any more digital assets, we want to get our current product to a place that customers are getting the experience they expect, and we have a stable and performant exchange. After which we accomplish that, then we're going to start looking at adding new digital assets.
That was Adam White, VP of Coinbase, speaking with Caroline Hyde in London. Coming up, besides winning NBA titles, Steph Curry of the Golden State Warriors has been busy investing in tech companies. So where is he putting his money? We'll hear from Curry next. Plus, Alibaba's earnings show it continues to dominate in e-commerce and mobile. Can the company go toe-to-toe with Amazon? This is Bloomberg. Pandora Media will have a new CEO. The company announced that it has hired Sling TV head Roger Lynch. He'll be the fourth leader in less than 2 years, charged with reviving the struggling online music company. The appointment is effective September 18th. Pandora also said Michael Linton, the former CEO of Sony Entertainment, will join its board. Well, two of the top players in the NBA helped kick off the inaugural Players Technology Summit in San Francisco right here at our Bloomberg office. The summit brings together top leaders in tech, venture capital, and sports to exchange ideas and expertise. In our exclusive interview, our editor-at-large Corey Johnson caught up with Steph Curry and Andre Iguodala of the Golden State Warriors, who co-hosted the event. He started by asking about Curry's investment in Pinterest.
It was something I used and something my wife used, and for me it was an opportunity that was a couple years back, a way to just kind of get some skin in the game. It's not something I'm involved with day to day, but just to see the growth of the company and have that feedback of Q1, Q2, Q3, Q4, seeing how the company's doing and keeping track on that. So that kind of was actually, besides my company I started with my business partner at Slice, that was one of my other early investments that I can kind of follow and grow with it. So it's been fun learning from that, and hopefully I can continue to grow my expertise in the investing game.
And you're all over the place in some of your investments. I mean, last time I talked to you, we talked about a skincare product, shaving company that you're invested in. You're invested in a company called TrueMid, which sounds like it's competing with Bloomberg in some ways. You know about this? It's like a bond trading?
Yes, a bond trading platform, and you can do it mobily across your phone. And when you think about tech, and you think about Silicon Valley, you think about disruption, you think about efficiency, and that's what TrueMid is. And bond trading hasn't changed since the beginning of time. You know, you sign a piece of paper and then you hand it to someone else, and then you think about, the Eddie Murphy movie Trading Places, and the beginning scenes where the papers flying everywhere.
Which was so true then, yeah.
Right.
I mean, more entertaining when Eddie Murphy does it, but everything he does is more entertaining. Right.
So that was something that was approached to me of how to disrupt that market, and the vision was great by Ronnie Mateo, who actually started it. So I've had a really good conversations with him about that, and that's how I got into that. And this whole thing for me pretty much started with an E-Trade account, and I started investing in a lot of tech companies in that, and that's what drove my business partner, Rudy Klein Thomas, and myself into this space. So it was a perfect marriage for us to be, aligned with a company like TrueMid.
Well, I guess I should back up too. When you think about the history of athletes and investing, I mean, the bad stories are the ones that make the news, but there are some bad stories. I mean, your father was in the NBA. I think about the athletes who've had fathers. Ken Griffey Jr. had a father who was a great baseball player. Barry Bonds had a father who was a great baseball player. Your father was a fantastic basketball player. But they've also sort of probably, I would imagine, raised their kids with lessons of, remember that guy I used to play with, he blew everything. Remember that, we've come a long way from Charles Oakley and his car wash investment, which is a great investment, but that was sort of the notion of what NBA players did with their money, and I think it's a lot more sophisticated now.
I would think so. I mean, we've been blessed to play this game and make a significant amount of money, and with the responsibility of what do you do with that? Like you talked about earlier, you want to grow that money in a smart, responsible way. Things have changed. The tech space, like Dre said, is booming, and to find open doors and access to that world is huge. But not only that, finding advisors and people that are close to you that you can trust to give you that right guidance and wisdom, and not just blindly throwing money at a company or at an idea and hoping it takes off just because you have that prestige. It has to be smarter than that.
That was Steph Curry and Andre Iguodala of the Golden State Warriors. Coming up, tech firms are taking a closer look at their policies over hate speech and hate groups, even after the events in Charlottesville. We'll hear from the CEO of Cloudflare about the bigger implications. And a reminder, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Tech companies from Airbnb to Facebook are going on the offensive against white supremacists and Nazis in the wake of the violent rally in Charlottesville, Virginia that left a woman dead. Cloudflare has added its name to the growing list of companies cracking down on hate groups. The web security company decided to end its business with the Daily Stormer, a known neo-Nazi website. It was a surprise move as the site prided itself on its unwavering commitment to free speech. Cloudflare was criticized for providing service to alleged terrorist groups in 2013. Cloudflare CEO Matthew Prince joined us to discuss.
The Daily Stormer was a really unique incident, and to us, it was the exception that proved that we really needed to rethink a lot of the rules, not just with Cloudflare, but with the tech industry in general. In this case, the Daily Stormer really came on our watch list, our attention list, and really got put on probation a few months ago when we started to get reports that they were actually harassing people that were submitting abuse reports through our platform. And then earlier this week, they were bragging on their bulletin boards that the people of Cloudflare, the senior management of Cloudflare, were actually supporters of theirs. In reality, we think that the content that was on the site is abhorrent and vile. And that was really the final straw for us. But I think there's a really important piece here where we need to think about who it is as a technology company or the society in general that can regulate what content is online. I sit in a very privileged position running a company that sees about 10% of all internet requests, and I could make a decision that they shouldn't be online anymore. And I'm not sure that I'm the right person to be making that decision.
Now, to be clear, I think we should take a moment to talk about what Cloudflare does, because just because you pulled the plug doesn't take the site down, but it makes it more vulnerable to attack, right?
That's right. And so Cloudflare provides a number of services. We make sites faster. We help them stay online. We stop big cyber attacks launched against them. And again, see a huge portion of the internet. Most of our big customers are big Fortune 500 companies and otherwise. But we have small customers like the Daily Stormer that get attacked all the time. The reality of the internet today is that it's become such a dangerous place that if you don't have a major network like Cloudflare sitting in front of your infrastructure and you do anything which is controversial online, chances are that hackers are going to be able to knock you off.
Now, the reality of the internet is also that the Daily Stormer isn't the only Nazi website online. There are other hate groups online, and are those groups still up and running thanks to Cloudflare's services in part?
So we still believe that the right policy is to be a content-neutral network.
So this is not a precedent, what has happened with the Daily Stormer. This is a one-time thing.
That's correct. I think that this is, we hope, a way for us to say, let's stop and think about what's the right place for internet content to be regulated. You think about a company like Google. So Google terminated the Daily Stormer from using their registrar service, but they didn't kick them off their ISP. They didn't push an update to Chrome that didn't let you access it. They didn't stop answering their DNS queries across their DNS service, and they didn't pull the search results from that site. What that tells me is not that Google made a mistake in that, but that where in the internet stack something is being restricted or controlled matters. And so the rules for someone like Facebook or Twitter or YouTube are inherently going to be different than a company that runs a network like Cloudflare or Level 3. And I think we need to have that conversation about where is the right place for content to be regulated and who's going to make those decisions and how are they going to make those decisions.
Cloudflare has been called terrorists' little helper, a company that helps serve up hate on the web. Even if the rules are different for you than it is for these content providers, how do you respond to those accusations?
Well, the nature of being neutral is that there's going to be someone who you upset all the time. We have a project called Project Galileo.
But terrorism is different than,
Sure.
upsetting someone else.
Yeah.
For a variety of other reasons.
And so when we hear that there's an allegation that there's something that's terrorist content, illegal content, or otherwise, we turn to the experts in terrorism and illegal content, which is law enforcement, legislators, regulators, and we say, here is this content, what would you like us to do? That to me feels like the principle of due process, that they are actually politically enshrined organizations who can make these decisions, as opposed to these decisions being made based on what the political whims of me or Mark Zuckerberg or Jeff Bezos. business are.
So are you saying you think the internet and these internet companies should be regulated like utilities?
I don't think that that's the answer necessarily, but what I do think is that we need to have a conversation between all of the different stakeholders, and that means the technology companies, that means regulators, that means content creators, that means content consumers, that means civil society organizations, because at this point it's the Wild West where people are making these decisions and those decisions aren't actually transparent. This has been framed a lot as a freedom of speech issue, and I'm the son of a journalist. I think freedom of speech is absolutely critical, but I think it's important to acknowledge that it's a uniquely American concept and uniquely American idea. On the other hand, due process is something that spans the globe and people really, really, really believe in. And part of due process requires that there is transparency, that there's accountability, that you can understand what's going on. And I don't think that that's necessarily what's going on with technology companies right now.
You've warned this is dangerous territory, this is a slippery slope. What is the worst case scenario?
Well, again, I think the worst case scenario is that you have a cabal of 5 to 10 tech executives who basically are choosing what content can and cannot be on the internet based on either what their own political and personal agendas are, or even in worst case, what their economic incentives and agendas are. That, again, I think is something that even as someone who sits in that privileged position, I'm worried about as an internet consumer. And I think it's important, again, that there's an understanding and accountability for when technology companies are making these decisions.
Look, these people, Nazis would find each other if the internet didn't exist,
That's
right? But, you know, some people have argued that technology has given these groups oxygen, has allowed them to find each other more easily, has allowed them to grow. You know, given that these tech companies are now so powerful, including your company, which handles 10% of all internet requests, do you think that by taking a moral stand, even if it is a stand that these companies haven't taken before, they can actually make a dent in the fight on terror? Like, can tech companies make a difference with their policies? And if so, does it make that moral choice worth it?
So I am skeptical that censoring content makes content go away. On the other hand, I do think that taking content and saying this is something that we support and we believe in and we'll help promote that is really important. So what we're—
But isn't that like the opposite? Like sort of, it's a double-edged sword, right? Promoting things you like versus, you know, condemning things you hate.
Again, I think that if people learn to hate, and so if we can teach them how that isn't a productive and part of a modern civil society, then that makes a ton of sense. So what we do at Cloudflare is we actually work with over 100 civil society organizations to identify either politically or artistically important groups that might be under attack. And they may not be under attack from hackers, but they could be from governments, for example, LGBT groups in the Middle East, human rights workers in China, where they might be trying to be silenced. And we say we'll lend our services in order to make sure that they stay online. I think that that's the role that technology companies can really play, is in saying, here is a way, here's an alternative way of looking at the world, which again is more progressive and aligns with the moral values of those companies.
Are you still, in this moment, uncomfortable with the decision that you made about the Daily Stormer?
Absolutely. I think, again, you know, I woke up one morning and got sick of these jerks using our platform, and I flipped a switch and they were no longer on the internet. And I'm not sure that that's a power that any individual, especially any individual that isn't politically, sort of has a political legitimacy to them, that any individual should be making.
That was Cloudflare CEO Matthew Prince. Well, Jana Partners continues to bet on groceries. The activist fund founded by billionaire Barry Rosenstein has announced a 2% stake in meal kit delivery service Blue Apron. Shares are down by nearly 50% since its IPO in June. Jana also says it owns nearly 600,000 shares in organic grocer Sprouts Farmers Market. Remember, Jana reaped a $300 million windfall after selling its stake in Whole Foods back in July. Coming up, China's largest online marketplace boosted its dominance in e-commerce and mobile. We'll break down Alibaba's results next. Plus, Apple is making a major push into original programming. Later, we detail the steps it's taking to compete with the likes of Netflix and Amazon. This is Bloomberg. Alibaba delivered blowout earnings in the last quarter, with sales jumping more than 50%. But China's largest online marketplace is setting its sights on new goals, now stepping up its spending on media and content, as well as a new retail strategy. I spoke with Hans Chang, managing partner at GGV Capital, and Bloomberg's Selena Wang about the results and Alibaba's future.
Of course, we'll be impressed anyone can grow at this size, but at the same time, we also feel very vindicated because for the last 2 years, we have been saying that Alibaba was going to be great, and a lot of people had skepticism with given the China downturn economy, stock market crash from 2 summers ago, and yet Alibaba continued to just grow and grow and grow. It has been impressive to see them do that.
Now, I want to take a look at how revenue growth has progressed. Take a look at your Bloomberg G #BTV4742 shows how revenue has grown over the last several quarters. Selena, the company executives spent a lot of time on the call talking about a new retail strategy, another area they're expecting significant growth. What does that really mean?
Alibaba, like Amazon and many other e-commerce giants, have been talking about how really the future of commerce is when you combine offline shopping with online shopping. So Alibaba wants to leverage the millions of consumers it has, as well as all their data, to deliver a mobile app that offers a seamless experience when you're actually in a brick and mortar store. Now, a lot of Alibaba's recent acquisitions have been billions of dollars poured into this offline commerce. And for the first time, we heard a lot of talk about this HEMA concept. It's something that Alibaba's kind of been quietly incubating for the past 2 years, and they've rolled out more than 10 stores around China. And basically, you take the app, you download the HEMA app, walk into the store, scan the goods with the barcode, you check out with Alipay, and you can pick out your own seafood there, have it cooked on the spot to eat in the store, or have it delivered to your home in 30 minutes. And Jack Ma and his executives are really betting on this type of strategy to drive growth in the future.
Hans, how do you compare what Alibaba is doing here with these HEMA supermarket stores, which actually double as warehouses for Alibaba's online orders? How do you compare what they're doing to Amazon?
Well, right now in China, e-commerce as percentage of retail, offline retail, is roughly 15%. And that penetration rate is growing by 1% year on year. And for Alibaba to continue to grow at over 50% a year, they need to figure out a way to tap the other 85% of spending that's in the offline business. And that they're doing that through Hema, which is a very interesting way of combining online with offline. I think part of that inspiration for Hema comes from looking at what has happened in Japan retail in the last 20 years. For most Westerners who haven't been to Tokyo, you go to Tokyo, you go to Osaka, you see these high-speed rail, you see the subway stations, and you see tons of stores inside there. You land in Tokyo, you can check in your luggage. At airport, you'll get sent to your hotel. And China has learned from that and apply that to e-commerce.
I find it interesting that Alibaba is taking on grocery, though, at the same time that Amazon is here in the United States.
And Amazon did it after Alibaba moved.
Right. But how do their efforts compare?
If you look at it, the sort of size of the mobile payment market in China, in 2016, it's about $790 billion. That's 11x the size of the U.S. mobile payment market. What it means is that the Chinese consumers are very used to paying with their smartphone, and they will use Alipay, they will use WeChat Pay to make payments everywhere they go. So they can go to a store, they see something they like, they can make a purchase. If the inventory is not available, no problem. The warehouse can send that to their home in the next 30 minutes. That kind of delivery and service level is something that we don't see in the U.S., and you'll see that happen more and more in China going forward.
Now, Selena, cloud revenue, another big growing part of Alibaba's business, but also they're losing money there. Talk to us about what's happening when it comes to cloud computing.
So they reached a milestone there. They had more than 1 million paying customers, but we did see growth slow down from that triple-digit growth rate that a lot of analysts had been predicting. Digital media entertainment, we also saw growth slow from triple-digit growth to just 30%, which is still good, but in comparison to previous quarters, it's considerably less. And a lot of the reason for the growing costs in those areas is because with the cloud area, they need to spend on data centers, and with the entertainment division, they're spending very heavily on content. And there's a big war being waged between Baidu, Tencent, and Alibaba. They're all bidding higher and higher prices for content, so it's likely that those losses are going to continue to widen before they get any better.
Hans, shares have been on a tear. Is it warranted? Is it going to continue?
I think that there's a chance that e-commerce as a percentage of retail in China will move from 15% to 30% over the next 20 years. So as such, that would be a good foundation area for growth for Alibaba.
That was Hans Tung from GGV Capital and Bloomberg's Selena Wang. Well, Airbnb says Asia represents the biggest opportunity on the planet. Bloomberg's Haslinda Amin caught up with the company's co-founder and chief strategy officer, Nathan Blecharczyk, in Singapore.
Intra-Asia travel is a big deal. So we've been promoting Airbnb in a number of countries. In Singapore and Australia, we're very ubiquitous. We're probably most well known in those countries by the populations. We've been investing a lot into China, though, lately. Chinese travelers are going all around the world. It's the fastest growing segment. They're the #1 spenders on international travel. We're running a big campaign there right now. And so a lot of our growth in Singapore and elsewhere is happening as a result of Chinese travelers using Airbnb to explore the world.
For China in particular, you have Airbnb wannabes, the like of Tujia, which tied up with Expedia, and today it has about 450,000 listings and growing. What's the strategy? I mean, you'll be competing with more players than Tujia alone.
So there is local competition in China. They're largely focused on domestic travel. Our focus historically has played to our strength, which is international travel. So we've been marketing Airbnb as a way for Chinese to explore the world. We have now 4 million homes in 191 countries. None of the local competitors in China have that. And so we've made sure that we've played to our strength and not engaged in any kind of direct competition.
Are you adopting a different strategy in Asia compared to the US and Europe? Because it does seem like Airbnb is pretty low-key in this part of the world. You're pretty aggressive in your marketing strategy elsewhere.
Yeah, well, in every part of the world, we're trying to partner with government. This is a new model, and new policies have to be passed to, I think, realize the full potential of home sharing. And so, we do that government by government. Most recently, we've seen a big success in Japan, where Japan has passed a new national law, basically saying home sharing up to 180 days is now legal, and it's a huge opportunity. Japan has been our #1 destination in Asia now for a number of years.
But even for Japan, I mean, it's a matter of implementation, and that is still a work in progress. If you take a look at Singapore, it also recently passed a law stating that it is illegal to rent a place for less than 6 months. I mean, what's your take on the regulations across the board in all of Asia, the differing regulations?
Yeah, well, it's obviously not.
Does it make it a more competitive or difficult marketplace for you?
It's obviously not a simple topic, and I think what we've seen is, this will play out over time. We try to be as proactive and be a partner to government as much as possible, but figuring out exactly the right model and all the implementation details will take time. It's not a one-and-done type of situation. I'm sure things will continue to evolve even here in Singapore.
Give us a sense of how important the Asian market will be in the future. You turned profitable last year. How do you see Asia contributing to your profitability going forward?
Oh, it's huge. Asia has been the fastest growing region for us.
But from a very low base.
From a low base, although quickly catching up. I mean, this has now been a story for probably 3 years. It's been our top growing origin region. And if you look at all the industry numbers, it is the biggest opportunity on the planet, China specifically. But if you also look at Southeast Asia as a destination, all the numbers are incredibly promising.
That was Nathan Blecharczyk, co-founder and chief strategy officer at Airbnb. Coming up, Apple is said to be throwing down the gauntlet with a big-time investment in its original programming. But with other tech giants in the space, will it be too little, too late? And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Amazon is selling bonds to finance the $13.7 billion acquisition of Whole Foods. People with knowledge of the matter say the online giant sold $16 billion of unsecured bonds in as many as 7 parts. It is the 4th largest jumbo deal year to date. It's the first bond market foray for Amazon since 2014. Well, Apple is out to make a splash in Hollywood. The tech giant plans to spend about $1 billion on its original programming in the next year. That's according to people familiar with the matter. The company is creating a new LA-based team and recently hired 2 top Sony TV execs to lead the efforts. The news comes amid Apple's intensifying efforts to compete with the likes of Amazon and Netflix, with both already having solid footing in the space. I spoke with our Bloomberg Tech reporter Alex Webb, who covers all things Apple, about the plans.
We know they're building a team in Los Angeles. They have an office there, which was essentially originally the Beats office, and where they now have Apple Music. Jimmy Iovine sits there, the very prominent record executive turned Apple executive. And from Apple Music, they have been doing small things in television programming. We saw Carpool Karaoke, Planet of the Apps. Now they've carved that team aside. It no longer is part of Apple Music. It reports to Eddie Q, the head of Apple Services business, and they've got a big wedge of cash now to spend on original content.
Now, we did ask Tim Cook about this when we spoke ahead of the earnings call a couple weeks ago, and he said, right now we've just gotten started when it comes to investing in original content. We feel good about where Apple Music is, very good. Subscriptions continue to move along, and I do think video will be a contributor over time. How big a contributor?
Up to a point, it's them replacing revenue which is gradually being lost from iTunes.
Right.
At the moment, I don't know about you, but when was the last time you bought a film on iTunes?
I do all I can to not buy movies.
Well, there we go. and you know, you have Netflix and Amazon, so they're plugging that gap. Now, Apple's trying to ensure that revenue doesn't disappear from iTunes and go to Amazon and Netflix. It stays with them, and also then serves to glue people to their products, to their iPhones, to their iPads. The odds are, while you'll be able to watch these films on PCs, you will probably not be able to watch them on an Android phone or a Roku or something like that.
Are they trying to play in the House of Cards, Game of Thrones arena?
I think there's every chance. You're speaking to some of my sources a few months ago when we weren't quite sure what the ambitions were. And this is why this news is quite interesting, because it shows the extent of their ambitions in the space. But they sort of said, we're going to see what happens with these early shows that we've done, and from then take some steps and see what's possible. Now, the people they hired 2 prominent executives from Sony who were behind Breaking Bad. That kind of perhaps gives a hint at the scale of some of the things they're trying to go for.
So these Sony TV executives, former Sony TV executives, what do we know about them and what they've worked on?
I mean, they're very prominent guys. I'm afraid to say, short of getting up their IMDb page, I can't name everything they've worked on, but Breaking Bad is the most prominent project. Jimmy told us...
Not a bad record.
Pretty good calling card. When we spoke to Jimmy Iovine back in April, he said that they were aiming to have 10 original shows by the end of the year. We know about perhaps 3 or 4 of those. It could be that some of those are very substantial projects. But let's say one thing to put it in context, though. The $1 billion that Apple is going to spend in the next 12 months, that compares to sort of $4.5 billion that people estimate that Amazon will spend this year, and $6 billion, that Netflix will spend. So it's a big sum of money, but it's not as much as some of the competitors.
We've been looking at some video of Planet of the Apps. We know that it didn't get the best reception. I mean, when it comes to their efforts so far, how much success have they actually had?
From a critical perspective, there have been some hiccups. It's very hard to know what it's doing in terms of viewership. But so far, these products have really been about dragging people towards Apple Music. We should also say, though, that it's been a learning curve for Apple. They haven't necessarily had these experts in the TV industry in production, in procuring the right projects, and that's what they've done now by bringing on board some of this talent from Sony and elsewhere. The thing I heard today from some of the sources I spoke to, full credit to the Wall Street Journal, they broke this story first. We were able to match it, and they were saying that they're really hiring aggressively in this space. They're trying to expand it substantially.
Bloomberg's Alex Webb there. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And remember, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays. That is all for now. This is Bloomberg.